So the last component here of the statement of cash flow is the financing activity section. And financing activity section consists of um, things that are related to funding the business, such as issuing notes, because when you issue a note, you're going to increase your cash account, and you increase your cash account because you took out a liability, so you took out a note. So that's an item that is going to be included in financing activities. Then you have issuing bonds. Bonds and notes, they're similar in nature. When you issue a bond, that certificate, you're receiving cash for the issuance of the bond. So that's going to be in that financing activity section. Um, Equity too as well. When you do issue stocks in exchange for um, giving ownership to an investor, that's also a financing activity uh, or included in the financing activity section because you're receiving cash in exchange for giving shares to an investor. So things like that, those are going to be included in the financing activity section. Okay, so there are a few things that are included in the financing activity section from the left side here on the screen, but there's additional information that you are not able to see on the screen. And what I'm going to do is read them out that is relevant to the financing activity section. So, number one, the company received $15,000 in cash from issuing 3,000 shares of common stock. Okay, so that entry here, when you do issue stocks in exchange for cash, you're going to debit cash for 15,000. You're going to credit common stock for that same amount. When this entry is made, you are funding the business from the supply of that cash in exchange for common stock. So when you do that, this is going to be this cash amount of 15,000 is going to be listed under the financing activity section, and this is going to be called cash received for from shares. We'll say for shares or from shares or stocks, and it's going to be an increase of $15,000. Okay. Next, we have number two. We got paid $18,000 cash to retire notes. So notes payable with a $34,000 book value yielding a $16,000 gain. Okay, so this is a note. And so the first part here is paid $18,000 cash. So right there, we know that cash went out of 18,000. And when you do have a note is a funding element. It's a funding tool. So we're going to see put on here cash paid to retire note, and that's going to be a minus $18,000 because cash was paid. And lastly, we have dividends. One thing I didn't mention, dividends. So whenever you do need to pay out dividends, this is going to affect the financing activity because, well, the dividends that you're paying out is coming from the cash that you received in exchange for shares or giving out shares to investors. So when you pay out dividends, it's going to be an offset to the cash that you receive from those shares that you provided or that you supplied to the investors. So the last part here, number three, declared and paid cash dividends of $14,000. So we're going to put on here cash, let's see, paid for dividends that was paid out. And it's going to be a subtraction of $14,000. Okay, and this is what makes up the financing activity section. So if I zoom out here, scroll, or zoom in, not scroll, zoom in, so we can take a look at the whole picture here. But we have to break it out in parts because it is too much information here on the screen. We started off with presenting the net income of $38,000. That was reflected in the income statement using the accrual method. And this, of course, is using the indirect method, followed by the non-cash items of depreciation expense and the loss the loss on the sale of the plant assets and the gain on the retirement of notes. Then we have the current assets here, followed by current liabilities. And our net cash provided by operating activities came out to be $20,000. So for investing activities, we have a plus $2,000 for cash received from the sale of plant assets. So our net, I know this is a little messy, our net cash provided by investing activities is $2,000. Okay, it's $2,000. So $20,000 plus $2,000, that's $22,000 in total. Now we get to the financing activities here. Okay, so financing activities here, we have a plus $15,000. All right. So plus 15,000. Then we're going to have subtraction of 18,000 from cash paid to retire note. And then we have another subtraction of 14,000. And if we do the math, 20,000 plus 2,000 is $22,000. 22,000 plus 15, that's 37,000. 37,000 minus 18,000, that's 19,000. And so 19,000 minus 14,000, that's going to give us 5,000. Okay, $5,000. Okay, now that's the net cash increase. Net cash increase. Or net increase in cash. Right? So this is including net income, plus or minus non-cash items, plus or minus current assets, plus or minus current liabilities in the operating activity section, plus investing activities, plus financing activities. That gives us the $5,000. And you can see here on the left side of the balance sheet, in 2020, we started off with a cash balance of $12,000. Okay, so that's a balance right here, $12,000 in 2020. That's reflected as the cash balance at the end of the period of 2020 and carried over into the beginning of the period of 2021. And so when we add 12,000 to this $5,000, that gives us a total of $17,000. That's our cash balance as of 2021, which reflects, let's see if I can zoom here. It reflects this cash balance here. Oh, that's bad. Let me, hopefully you can see. I'm gonna zoom in a little bit more if it will let me. It reflects this cash balance that's displayed in the balance sheet as of 2021 in the current asset section.